Let's talk about the new debutante on the Lal Street, Smartworks, doing particularly well, up about 13% from its issue price. And we've spoke to the management, in fact. We've got the management. My colleague Agni Dev interviewed Harsh Binani, who is Executive Director, and Nitish Sad, who is the Managing Director of the company, and talked about their future plans. Listen in.
What are the plans beyond this? You will be using capex of around 230 odd crore for capex and another 114 crore for loan repayments. But that's the funds that are raised from the IPO. Beyond these funds, what are the plans for growth for Smartworks?
Smartworks' trajectory in the last 3 years, we've been growing fairly quickly. From 6 million square foot, we've grown to 10 million square foot. From a adjusted EBITDA of 35 crores, we've grown to 172 crores. If you look at that growth trajectory, it's a 3.5x growth in our EBITDA numbers. We are using these funds from the IPO not just to grow, but there is an ambition to take this business to a significantly higher scale. IPO funds is only a part of that funding, because the cash flow that the business is generating itself is also funding a significant portion of that growth.
Right. So if I take that a step forward, you're currently operating 50 centers across 15 cities. So is there any plan of expanding beyond that?
So 90 to 95% of India's demand comes from the top 7 cities. We'll continue focusing on having a bigger presence there. There are other interesting cities that you can explore, especially in the tier 2 and the tier 3 regime in India. And we will look at expanding into those cities. But majority of our expansion will be within the tier 1 cities in terms of scale of the centers that we're taking.
Right. So my next question would be if you could give me a color on your anchor book, which saw participation by quite a few famous investors. So what kind of a confidence does that bring in for a company like Smartworks going ahead?
Thank you so much for having us on this momentous day. And we would like to extend a sincere gratitude to all our existing investors. They've shown a lot of confidence, right, from Government of Singapore through Keppel, Madhukela Family Office, Inam, Hexaware, Polycab, all of them who've not only invested but reinvested in the business. Our anchor book reflects a growing strength in the long-term orientation of the business. We've created a lot of value for our shareholders in the past, and we intend to continue doing that in the future. The current anchor book has a good mix of mutual funds, life insurance companies, FIIs, all who are long-term, because we truly believe that the story of Smartworks has just started, and IPO is nothing but just a comma, not a full stop.
Right. So, but now that you're listed, you will be competing against the likes of, say, an Office Space or even WeWork that's recently gotten a SEBI approval for their IPO. So, a couple of questions do stem out from this fact. First of all, how do you maintain your competitive edge? I know that your business works on a very different model compared to the listed players. And beyond that, since you are a listed company and now retail investors will constantly be looking at your bottom line profitability, which is still in the red as of now. I know your cash flows are still better than your EBITDA, and all the money is getting back into the company. But these are my 2 questions I'd like to ask.
There are 3 unique aspects to Smartwork which we believe makes us stand out. A, we are the largest, so scale inherently brings a lot of advantage. As businessmen, we understand the importance of cash flows. That is the beginning and the ending of Smartworks, and that is a gold star where Smartwork really shines today. And we also understand in an environment like India, frugality, cost leadership is extremely important. So if you combine scale, cash flow and capital efficiency, and the entire aspect around our frugality, you have a very powerful package that has ensured that Smartworks has grown faster than the industry. In fact, we've grown 1.5x faster. And given the scalability of our business model, we intend to continue scaling up the fastest, and in such a short span of less than 8 years, which includes 2 years of COVID. If today we've become the largest with 10 million square foot, you can only imagine that India today being the office to the world, and with the grand vision of our Prime Minister Modi ji to make India the developed economy by 2047, what will be the requirement of modern office to cater to the workforce? And here is Smartworks, which is less than 0.5% of India. And looking at us, we are less than 35, we represent the youth of India. Next 25 years is where we would want to continue working and realize this ambition of making India developed economy as well as making Smartworks not only the largest, why can we not go to the globe and make Smartworks one of the largest in the world?
So with that bullish sentiment, again from a purely bottom line perspective, when can we see it getting back in the black, like a positive number for your bottom line over the next few quarters, next few years, if you can give any color to that?
Like Nitish had mentioned earlier, our EBITDA has seen a 3.5x growth from 36 crores to 172 crores. This accounting loss that you're mentioning is simply because Ind AS 116 ensures that we have an accounting provision for lease liabilities which are actually not paid by the company. So if you look at our trajectory, even on that aspect in the last 3 quarters, you're starting to see a significant movement towards the gold line that you're mentioning. So this profitability and cash flow strength of the company is already inherent, and as we continue to scale up, because our revenue only grew by 1.8x in the last 2 years, you will continue seeing the inherent advantages of scale getting us to this landmark very.
All right, so 13% up on listing day. That is the latest entrant to the Indian equity market. Smartworks Coworking Space is doing particularly well.